Hello, everybody. Welcome in. Thank you for joining. Today, we're going to cover Coinbase and the Coinbase IPO. And it's, again, one of those things. I work for you all, and I had 50 requests for this over the last 2 or 3 days. So I'm going to give you my detailed analysis of whether or not I would invest. And as usual, it'll have a lot of numbers in it. So first of all, this channel is about math, money, and freedom if you are new. But not only is it about making money, but it's also sometimes about saving money and managing risk. So if you like this type of content, of course, please hit the like and subscribe if you haven't already, if you're interested in making money. So that's the mission here. Anyway, let's jump right in as we do, as always. First of all, let's talk about the company itself. It was founded by Brian Armstrong. He was an Airbnb engineer, smart guy, no doubt about that. And he wanted to bridge the gap between fiat and crypto, help people convert fiat currency into crypto. And he has a vision for the world. And he wants 1 billion people using his platform. So his whole vision, and he's very passionate about it, is to put crypto in the hands of everybody and also help people that are a little bit disadvantaged in certain countries in the world. Now, what's really cool is they want to enable people to be able to buy stuff, receive money, pay bills, play, stake, borrow, lend, you name it. That is the whole Coinbase vision. Not all elements are operational right now. Some of the products are still in the works, but it's coming. And I must say, I'm very, very impressed with where they're going. And it's along the lines of other companies as well that are doing similar type of things. So let's go a little bit deeper as always. So the vision, what I love about it is, in my words, I call it economic freedom for the world, which is closely aligned with what I'm trying to help people do as well, become financially free so they can do good in the world and not necessarily work for the man. But his vision is digital currency will bring about more innovation, efficiency, and equality of opportunity in the world by creating an open financial system. It's beautiful. I couldn't have written it better myself. So I am completely bought into the Coinbase vision. Now, let's look at some initial numbers. I'm going to look at a lot of numbers as always. All my conclusions I arrive at through data and numbers and information. They were founded in 2012. They have 43 million retail users, about 2.8 million monthly transactors. That is what some people call MAU, monthly active users, which is a very important metric which we will use later. They have 7,000 institutional clients, including some big names I'll talk about too. They have 115,000 partners. They operate in over 100 countries. They did $456 billion, nearly $500 billion in trading volume last year. They have 90 billion in assets, 1,200 employees, 1.14 billion in revenue. And that revenue is growing very fast. I'll talk more about that as well. And they have $465 is the price in private markets where Coinbase is trading today. So that's the first glance at some of the numbers. Now, how do they make money? Very simple. They charge fees on top of the spread. That's the spread between the buy and the ask. So every transaction, they make a little bit of money. They have a margin fee of 0.5% for all purchases and sales. They're coming out with a credit card soon. And they have their own coin, USDC, built in Ethereum, tied to the US dollar, which was in the news recently this week in one of my other videos as well. So they've got a lot of fingers and a lot of pots and a lot of ways of making money, but most of their money is made from transactions. Now, when I hinted at institutional clients, they are helping big customers transact OTC, which is over-the-counter trading, to be able to buy a lot of Bitcoin. For example, they were instrumental behind MicroStrategy, and I haven't confirmed or not, but I have a funny feeling they helped Tesla as well purchase Bitcoin. And over-the-counter trading is very important as well, because that doesn't rattle the markets. That lets companies like Tesla buy $1.5 billion of Bitcoin while keeping the market smooth, not just going in with one big check and buying all at once. That's OTC trading behind the scenes. So let's look at the breakdown of who owns the lion's share. So Brian Armstrong, he has 10.9% of Class A shares and 21.8% of Class B shares. Mark Andreessen has 24.6% of Class A and 14.2% of Class B shares. So basically, between these two fellows, they own a lot, more than 50% of the voting power. So they basically control the show. And in the real world, that's sometimes not a good thing. So we'll talk more about that later as well. So let's jump in and find out why a company would actually IPO. What are the typical reasons? Well, one is to raise cash. And normally companies invest a lot to grow their business because scale is more important than profit. But interestingly enough, Coinbase is actually very profitable. Also, private capital sometimes is hard to raise. Other reason is employees and investors want to cash out. And then remember, retail investors are at the back of the line when it comes to getting involved in an IPO. They have to buy retail. And when the retail investor is buying, who are they buying from? And that's very important for you all to know as you go forward. So Coinbase is doing what's called a DPO, a direct public offering or a direct listing IPO. And what this is basically is where the employees and the investors can sell their shares to the market. And there's about 114 million shares available. So this direct listing is basically, for the first time ever, letting people on the Nasdaq market to be able to buy the stock. So let's look at some IPOs and look at some history and analyze numbers to find out if it's a good idea to invest in an IPO or not. What does history tell us? So first of all, Professor Jay Ritter from the University of Florida analyzed IPO returns over 30 years, and he has some really good stats. But basically, more than 60% of more than 7,000 IPOs over the last 30 years had negative absolute returns after 5 years in the secondary market. That's not good. More than 60% negative returns over 5 years. Big, big, big. A breakdown of some of the numbers that you need to be aware of is the IPOs from 1980 to 2016. They typically go up 18% on the first day. And we'll talk more about that afterwards, what that could mean. And the average 6-month gain after that is about 6% or 2% excess return. What excess return means is the return of 6% less your riskless return. So back then when this was done, the average riskless return is about 4% on your money. So if you have your money in a checking account, it'll pay you 4%. Now, from 2000 to 2016, the 6-month absolute and excess return has been negative for both. So IPOs over the last 20 years, not a good place to make money. Over the last 30 years, 60% of them fail. Now, let's look at some of the big ones, though. However, if you are on the right side of history and you can pick the right IPOs, you can do very well. 9 of them of over 6,000 have generated greater than 3,000% in returns over 5 years, which is good. But you can see the vast majority of them do not do well at all. In fact, of all of those, a huge chunk, nearly 5,000 of them, lose money. So now that we've analyzed the history of IPOs and how risky they actually are, let's look at Coinbase and let's look at some of the fundamentals from some of the information that I was able to dig up. So first of all, the dollar question. Coinbase has had a massive ascent in value to $100 billion in a very, very short window of time, because a little over 2 years ago, it was valued at $8 billion. So it's gone up 12x in a very short amount of time. The question is why? So the valuations, again, in 2018, we had $8 billion. January 2021, it was $54 billion. That was some secondary selling going on at that actual value. And in Feb 2021, up to $100 billion. That's 2x in 1 month. But as usual, let's drill into some of these numbers a little bit more. So I pulled up a chart of the actual price of the history that goes all the way back to just before Christmas Day last year. So I don't have that much history. But basically, Christmas Day, Coinbase was valued at about $225. On the 1st of Feb, it was valued at $272. A month later, it jumped from $272 up to $404. And then 2 weeks after that, up to $490. And today it's about $466. So looking at those numbers, in 35 days, between Christmas and the 1st of Feb, it went up 21%. The month after that, it went up 48%. And then 12 days after that, another 21%. And over the last 20 days, it's come a little bit back down to earth, falling by about 5%. So you can see the trajectory has been crazy. So the question is, 3 months ago, you could have bought in at $225 if you had access to the private markets. Today, the price is more or less $500, and I'll talk more about the price and my price expectation as well. Well, let's dig in and look at the actual benchmark. So what I did was pulled up a couple of companies that were kind of similar to Coinbase. I looked at the New York Stock Exchange, the Nasdaq Stock Exchange, Square, because I thought it'd be interesting because they have a very lofty valuation right now. Schwab, which is, again, similar type of play, not too dissimilar, and Coinbase. So the market caps of these 5 organizations, 64 billion, 25 billion, 104 billion, 116 billion, and Coinbase approximately 100 billion, but I think it could be a little higher in the IPO. Then I looked at the revenue for each of these. You can see the revenue 7.4, 4.2, 9.5, 11.7, and 1. Then I looked at the monthly users. There are no monthly users per se for the big exchanges, but there are for Square and Schwab. They both have, coincidentally, 30 million users each. And then Coinbase has about 2.8 million monthly active users. So you can see it's a tenth of the number of users that the other guys have. Then we look at profitability, which is a very interesting one to look at as well. New York Stock Exchange, 3.1 billion. Nasdaq, 1.3 billion. Square, 215 million. Again, they are building and investing for scale. So profit for them, they are sacrificing so they can grow and take over the world. Schwab, 3.3 billion in profit, extremely profitable operation. And Coinbase, 322 million. So Coinbase has a very, very respectable profit, nearly 1.5 times that of Square. So from that perspective, that's good. But now what's really important to look at is the ratios. So I created some benchmark ratios for these same companies. And that way we can look at things with a much better lens. And so first of all, revenue multiples. You can see here 8.65 for the New York Stock Exchange, 5.9 for Nasdaq. Square is 11, which is a little high. Schwab is 10, but Coinbase is out of control. The multiple is nearly 88, which is an extremely high multiple for a company, no matter what business you're in. Now, let's look a little bit at the price earnings ratio. New York Stock Exchange 30, Nasdaq 27, and Schwab 31. These are all very lofty PE ratios. Historically, PE ratios should normally be around 20. But again, it's a very strange environment now, and the markets are very frothy. Square is trading at a PE of 521. Again, extremely high. But again, they are investing in the future. And Coinbase, their PE ratio would be 310, which is extremely high as well. Now let's look at revenue per user. Another interesting metric here, the 3 of Square, Schwab, and Coinbase were all kind of similar. So I put a little bit of yellow on the Schwab and Coinbase because the revenue per user is very good. Profit per user is low. It's only about $7 per user for Square. Schwab is $110 and Coinbase $115. So the profit per user is actually very similar to Schwab. So the other thing to look at as well is all global markets typically are valued at 12x of sales. So from a revenue perspective, revenue multiple perspective, Coinbase is extremely overvalued, but they are very profitable as well. The question is regarding the opening price. So right now it is trading at about 464 in the private markets. And I reckon the IPO cost per share will be about $490, maybe even way north of 500. And then add on that 18%, that could easily take us up to $580 on opening day. Remember, once these things IPO, the first 15 minutes, things skyrocket or they gap up really high. So expect the price to be somewhere between 490 and 580 at the open is my anticipation. As usual, always wait for the conclusions. That's where the real meat is in every single video. Now, the conclusions I have today are 5 parts. First part of the conclusion is Coinbase is growing very fast. That's good. Coinbase is very profitable. Very good. But historically, it's been proven that it's dangerous to buy IPOs, especially at the market open, and the valuation seems a bit frothy. So I'm a little bit on the fence there in conclusion part 1. Conclusion part 2, risks. Now, there is, of course, a risk of a crypto winter, a bear market, and this is where the monthly active users falls off precipitously. And you got to watch for that, because if that does happen, that will impact the revenue that Coinbase can make. Also, the other risk is a Bitcoin price crash. A hack. Coinbase has never been hacked, but you never know. It's always a risk. It's also a risk that they put in their public documents as well. And then DeFi is taking hold. This is another interesting one. The whole realm of DeFi, peer-to-peer trading, may make exchanges down the line completely redundant. So keep that in the back of your heads. That's a bit of a far-off risk, but I wanted to note it anyway. And of course, the Robinhood IPO is coming as well. Not really a risk, but it could actually put the actual valuation of Coinbase into perspective, although the way they make revenue is very different. Conclusion part 3. There are alternatives out there that seem to be a lot cheaper. So Binance and the Binance coin BNB is their ICO coin. They do a lot more volume than Coinbase, and they're a lot cheaper, but their margins are also a lot lower. But currently their market cap, despite being a much bigger shop, is only 52 billion. So that's just an interesting one to keep in perspective as well as we go forward. And conclusion part 4, this is the money shot. I'd say wait. Do not buy at the open for Coinbase. Wait and see exactly what transpires and what happens. Typically, 90 days after an IPO is the time that I have seen is a good time to buy, during a market dip or whatever else, if you really want it. So not investment advice, just sharing my experience and my perspective. Final conclusion is from Chamath. Now, I know he's very involved in the whole SPAC space. He doesn't really like the idea of this direct listing, but what he said here in his tweet was that the direct listing will either confirm direct listings as a reasonable on-ramp for companies, or kill it altogether by making the retail the true bag holders. Now, what he means by that is a bag holder is somebody left holding the bag, which is somebody left carrying the loss, which is not a good thing. You don't want to be left carrying the loss. So be careful of that. And where he's suspicious is he says, the markets have been very manipulated from the initial valuation in 2018 that I showed you to the January valuation to doubling in a month or 6 weeks. That is very suspicious. So the question is, do you want to hold a bag? I say, don't. Be careful. So again, that's my conclusion. Be safe out there, everybody. Thank you for the requests. I work for you. And please hit the like and subscribe if you haven't already for money-making ideas. Take care, everybody. Bye-bye.